Hello there, and welcome. Thank you for tuning in. And I've got an interesting article for you guys. I just wrote this and published this on Medium just a little while ago, and I figured I'd give it a read because it's important and important information and something I've been kind of thinking about for a few days now. And let me just double check if I am live. Yes, I believe I am live and there's audio coming through. Great stuff. Just let me put this on mute. Yes, okay. Yeah, so it's June 19th, and this is something I've been kind of thinking about for a few days because of the information that I've kind of been watching and seeing online, and something that's been developing over a period of a number of years. And we are in a financial reset season. If you don't know by now, financial reset is upon us, and I did quite well this past year and a half. So very fortunate. Grateful, very grateful, but it was touch and go for a few periods of time during that past year and a half. So I managed to come out of it unscathed and actually do well and prosper. So yes, I hope that is kind of my mission to help you guys through these times, unprecedented times, right? So let's take a look at Balaji's latest article on Medium. Yep. So the title is "The Feudal Class of America." And BlackRock is investing heavily in single-family homes, as well as apartment buildings. If you don't know the SoCal region, BlackRock has been heavily accumulating apartment complexes, right? And they are buying up as many as they can find, paying 20 to 50% above the asking price and outbidding regular home buyers. And why is this trend of housing being a financialized asset continuing with fresh vigor? Wasn't 2008 not a lesson? Was 2008 not a lesson? Is home ownership already beyond the reach of couples and newlyweds, etc., which further delays family creation, right? If you have to work longer to save up a deposit on an ever-increasing home, that just adds years to that process of starting a family, right? And this article was from the Wall Street Journal. If you sell a house these days, the buyer might be a pension fund. Yield-chasing investors are snapping up single-family homes, competing with ordinary Americans and driving up prices. And this is suburbia in America, kind of tract housing, box houses, kind of what Americans kind of dream of. This is what the dream they kind of been sold. 1 or 2 cars in their driveway. Look, even the Corvette, probably all on finance. These trucks right here are like $50,000. Ford King Cap or whatever it's called, the King Ranch or something. They're approaching $70,000 for a pickup truck. And I remember 20 years ago, you could pick up a brand new F-150 for $16,000-$17,000, right? Average price right now, I believe, is of a new car in America is approaching $40,000. Amazing stuff indeed. And here's the link to the article. So why are corporations, pension funds, and property investment trusts buying up entire neighborhoods out from underneath the middle class? Let's take a look. Homes are popping up on the MLS, which is the American real estate kind of website, and going under contract within a few hours. BlackRock, among others, is buying up thousands of new homes and entire neighborhoods. This is the continuation of that article on the Wall Street Journal, and by Ryan December. Interesting way he spells December. A bidding war broke out this winter at a new subdivision north of Houston, but the prize this time was the entire subdivision, not just a single suburban home. illustrating the rise of big investors as a potent new force in the US housing market. D.R. Horton Inc. built 124 houses in Conroe, Texas, rented them out, and then put the whole community, Amber Pines at Foster's Ridge, on the block. A who's who of investors and home rental firms flocked to the December sale. The winning 32 million bid came from an online property investing platform called Fundrise LLC, which manages more than $1 billion on behalf of about 150,000 individuals. The country's most prolific home builder booked roughly twice what it typically makes. That's double. Selling houses to the middle class, an encouraging debut in the business of selling entire neighborhoods to investors. We certainly wouldn't expect every single family community we sell to sell at 50% gross margin. The builder's finance chief, Bill Reed, said in a recent investor conference. And if you want to read the whole article, it's behind the paywall, unfortunately. So this is just the freebie. Okay. So who is BlackRock? Only the world's largest asset manager, and who is hell bent on pushing ESG investment, environment, sustainability, and green technologies. These are things that I agree with and wish to see further development in, of course. And this is from their website. BlackRock's high performance culture enables us to stay ahead of clients' needs, etc. This is Larry Fink's 2021 letter to CEOs. Companies, investors, and governments focus on the global goal of net zero emissions by 2050. And economic transformation is accelerating, right? And this is the BlackRock stock. Unbelievable performance. Only came into existence just merely 21 years ago, 1999, 22 years ago. Low of $12.50. And it's been what, 10, around the 70x, I believe, maybe slightly more, 75x roughly. Recent high of 890, currently trading at 840. Huge beneficiary of the current financial order, BlackRock. However, BlackRock is also the leading proponent of the Great Reset. They're looking to redistribute $120 trillion, the entire wealth of the world's middle class and poor combined several times over. So there we go. As an example, 124 new homes bought in its entirety in Texas. Now the entire neighborhood is made up of single-family rentals. Is this sustainability or green energy technology? Not really, is it? The Great Reset. BlackRock is fueling $120 trillion transformation on Wall Street. Big money is turning its back on companies that aren't conforming to one simple idea, sustainability. And it's fueling one of the biggest transfers of capital the world has ever seen. So what are SFRs, single family rentals? Voila. Now potential lower to middle class homeowners is positioned to be a permanent renter. This matters because for the lower and middle class, owning at home is the major part of any financial success historically, right? Going back, post World War II. And any future upward mobility is tied to the equity that gets accumulated within the asset vehicle, which is that house, right? It used to just be a place to shield you from the elements. Now it's become not now, it's been turned into a asset vehicle, right? And any properties that get passed down the generations, right? This is also key, passing down of property down to your kids and then your kids onto your grandchildren, right? That's how it's kind of been the main ways humans in the Western developed nations have been able to lock in their gains of a lifetime of working, right? and keep it within that family. And there has been a rapidly growing demand for SFR single family rentals across the country, particularly in the south and southeast. Demand is driven primarily by demographic changes, i.e., millennials starting families. There are also affordability constraints as there are more people moving away from small apartments in expensive cities to larger homes with yards. This trend falls squarely into our primary investment strategy of identifying long-term macroeconomic growth drivers. COVID dramatically COVID dramatically such a trend. I think this is a bit of a typo. Simultaneously, there's a chronic undersupply of single-family homes in America. It is driven in part by burdensome regulation. Try and build a home in California. And to some extent, the lasting impact of the housing collapse in 2008 has also cut supply short. The issue of undersupply was exacerbated by COVID. I don't know if any of you taken a flight over the United States. There is so much land to build on. There should not be a undersupply of houses, right? So this excess of regulation is really part of the reason why homes are getting to record highs. I believe they are record highs in America. Most builders pulled back on building new homes in beginning of 2020. Wow. Boom. All of these factors have made SFRs exceptionally attractive investment assets. So that trend of buying up the supply and keeping a lid on new production, right? New development of new homes, that is actually beneficial to a company like BlackRock, right? Not beneficial to you. This is wealth redistribution period, and it's not the wealthy whose wealth is getting redistributed. It is the everyday middle class, the working man or working woman, money heading up into the hands of the world's most powerful entities and individuals. The traditional savings vehicle is gone. High interest savings products that were once available in the banks have long gone the way of the dodo. Hence why there has been increased ownership of stocks these past couple of decades, but securities belong in a higher risk bracket, obviously as they depend on the work of others to continue to perform and create value in the years ahead. Remember the whole 60-40 asset, bond stock split? Yeah, that's kind of dead, isn't it, as well? Home equity is the main financial element that middle class families use to build wealth. BlackRock, a Federal Reserve funded financial institution, is buying up all the houses to make sure that young families can't build wealth or start families, right? Yep. The World Central Bank is enabling this to occur and possibly encouraging it to happen. Board appointees like Jay Powell are not the shareholders of the Fed. DYOR, do your own research. The lower and middle classes, please bend over for the rogering. Okay, this is fundamental reorganization of society, and China Joe will allow it to happen. So where does this position the average dude or gal in America in, say, 20 or 30 years, when it's a high likelihood probability that every new neighborhood is to be bought up whole so they can be utilized as single family rentals? It positions them as peasants, right? Being poor can be a temporary condition. The American dream was an opportunity to allow a shot at property ownership and upward mobility. Statue of Liberty here, July 4th, 1776. And on the slogan on the Statue of Liberty, I think there's a large poem, a verse, right? But this is the most famous line. Give me your tide, your poor, your huddled masses yearning to breathe free. Liberty, right? The US offered land and property ownership when most European nations did not. Property can provide for generational wealth and success, but as permanent guaranteed renters, you're passing up a lifetime of equity and a chance for mobility. You just become a working dreg, a peasant. The Great Reset is real. It is happening. This will be the greatest transfer of wealth and the greatest consolidation of power in the history of mankind, if they get away with it. A revolution will be the only cure. Wake up. Forewarned is forearmed. This is warfare. Lloyd's Bank in London is doing it, as is every great financial institution across the globe. It's a greater threat than the slow creep of communism. It is fiat-backed bombs being hurled at you. BlackRock, Vanguard, and State Street control $20 trillion of wealth, of assets. They control assets that are greater than the GDP of most countries, I believe, every country apart from China. BlackRock alone generates a surplus or equal to the US. That is around 22 trillion, the US economy. BlackRock alone generates a surplus of capital around $10 billion a year. So with 10% down, they can get mortgages on 333,000 homes every year. That's just BlackRock alone. Or like in the article above, just buy out neighborhoods completely, right? Probably using some sort of leverage. Free money upon free money, right? Within a decade, the entire landscape of US and other Western housing could be remarkably different, not to mention the war on private landlords and punitive inheritance taxes. As your house value rises, expect to pay unaffordable taxes to acquire your parents' property, right? As the house value goes up, those inheritance taxation limits are getting more and more reached with the average home even, right? This is a clean sweep, if you will. Private landlords in the UK have done exceptionally well past 20, 30 years, but that may no longer be the case. It's seemingly more and more likely, as we see, if you try to get a mortgage on a second home in England, it is, I believe, quite difficult. These investment funds may offer up a reason that they are chasing yield, but an overpriced house does not return much ROE, return on equity. If you compare the monthly income of the rent compared to a overpriced house, it is not that much. A low single figure percentage ROE. Dark forces are at work, in my honest opinion. You and I can't afford to make loss-leading investments, but these fiat-fueled institutions can. They are fronted by the Federal Reserve and financed by an endless stream of freshly created fiat money. Yep, green funny money. It's not even greenbacks. It's just, digits on a computer, right? Can companies which are buying up housing for way above the asking price and continue? I need to reword this, but I just basically reading it with no edits. Writing is tough. This movement is pushed by the same cabal that stole the 2020 US election and hid COVID truth and continues to hide COVID truth. Through installed political leaders and non-practicing scientific experts across the globe. Bitcoin fixes this, as well as other cryptocurrencies. Defund the establishment peacefully, right? Defund the establishment peacefully. Yeah. Hope you guys enjoy this. Some important info in here. I'll give this a clean up, but it's appreciate the likes, appreciate the shares. Protect yourself, your brain, your pocketbook, your body, your spirit, right? And protect others, right? That's what real men are supposed to do. Okay, guys. Peace, prosperity, Balaji.